Hello everyone, welcome to the ichimokucharts.com daily analysis for gold for Wednesday, October the 20th, 2010. Well, a green body candle today, and the green body tells us that the buyers have made some net bullish progress on the day between the open and the close. But if we look at the position of this candle, it certainly wasn't bullish enough for the market to change trend. We did have the extreme sell-off the previous day with a very large range to the candle on the previous day and a very large red body. So the amount of net bullish progress today is certainly not a match for the net bearish progress that was made on the previous day. So that could be significant for this market. If we look at the candle today as well, we failed to take out the low of the previous candle. We were set up for a potential lower high and lower low. The market did open lower. The bulls were not strong enough to take out the previous high. But by the same token, the bears were not strong enough to take out the previous low. So this is an inside day in bar chart terms, and suggests potential for a change of trend. Now, we do need to bear in mind, though, that the trend is still down. So we do have a trend to the downside, and the previous candle made a lower high and a lower low, so the downtrend is still in force. But inside days generally suggest that there is potential for a change of trend, so it's important for us to watch the high of the current candle for a potential higher high and higher low. Now, in Ichimoku charts terms, we are trading up above the cloud, so we do have an overall positive bias in this market. The market is trading above the Kijun-sen, so the market retains its bullishness in the medium-term time frame, but the market remains bearish in the fast-term time frame by trading down below the Tenkan-sen. The Kijun-sen is still pointing up, so that's reflecting the strong upside momentum that the market has built up over a period of time. So we still see in the second time frame that the market is still making a series of higher peaks and higher troughs. And we tested the previous trough here, which provided support. Previous day's candle, there was strong support that came in, not enough for the bulls to close in control of the market, but certainly enough to suggest that the bears lost commitment down around these levels. And once again, the green body suggests that the bears were strong enough to make the bulls were strong enough to make net bullish progress on the day today. Now, just looking at this market in bigger picture terms, in patterns, the market may be setting up for a head and shoulders pattern. That is not complete yet, so we do need to wait until this market either makes a lower peak here and starts to trend down again. But here, if we look, we have the prior trend, which is very important. We need a prior trend before we can have a head and shoulders pattern or any reversal pattern, because we need something to reverse, and patterns reverse trends, so there has to be a prior trend. We have here the left shoulder. In this area here we have the head, and there is potential for the market to make a right shoulder, and if the market makes that right shoulder and takes out the neckline, which would be between the two shoulders and the head, we aren't able to draw that in at the moment because we don't know whether we have a lower trough at the moment. But if the market does take that out, then there is potential for a major reversal pattern in this market. So it'll be interesting to see how this market plays out in that regard over the next week or two. There could be a setup for that to occur. Now, if the market does continue trending down, we should look to the area down to roughly about 11.20 or so for support, and we can see the shadows on the bottom of these candles where support has come in, and that's what's happened at the moment. And that area will extend roughly down to around 11.20, where there was some minor previous resistance. We also have the Kijun-sen trading at 13.25, where we should look to support as well. Down below there was a minor level of support down around 12.96, certainly down to 12.80, where there was very strong upside price rejection. And below there we have very strong support being offered down through the cloud, which extends roughly from about 1250 down through to around 1220, but that's a long way from where the market's trading at the moment. So over the next trading day, certainly the area down around 1320 is very important, but we should be watching the high of the current candle for a potential change of trend and a potential test of 1360 or above.